conflict. Rising volatility also could reflect positioning ahead of Friday's non-farm payrolls report, where a weak result might fuel perceptions of a U.S. economy struggling for traction. Analysts now expect jobs growth of 140,000 in September, down slightly from August's 142,000. The caution that emerged yesterday spilled into this morning's early trading, reflecting the aftermath of Iran's missile strike on Israel and dock workers walking away from their jobs at major U.S. East Coast ports. Major indexes lost additional ground not just in pre-market U.S. trading, but in most international markets as well, though traditional safety valves like U.S. Treasuries and gold walked back some of yesterday's moves. Also, the tech-heavy NASDAQ 100 turned green closer to the open as semiconductor stocks found buying interest. Infotech, which came under the most pressure yesterday, is a possible barometer Wednesday. WTI crude oil futures spiked again early Wednesday, rising 3% on media reports that Israel could target Iranian crude production. Iran's large crude output is just one vulnerable element of the world's oil market. Tehran could potentially tie up the Strait of Hormuz, the exit to the Persian Gulf where much of the world's crude exits for global trade routes. Fears of a wider Middle East war might keep oil bubbling if things don't quickly calm. The port work stoppage could slow commerce and even influence jobs and inflation reports in coming weeks if not quickly settled, though one silver lining is that inventories are elevated compared with sales for some of the most affected import categories, according to economists. Today's schedule includes several Federal Reserve speakers and a look at weekly crude oil inventories. Before that came the ADP September employment report that came in above expectations with 143,000 jobs added. Analysts had expected around 120,000. In pre-market trading, futures based on the S&P 500 index lost 0.1% and the NASDAQ 100 gained 0.1%. Futures based on the Dow Jones Industrial Average fell 0.1%. The 10-year U.S. Treasury yield bounced 5 basis points to 3.79%, gaining back most of yesterday's losses. The U.S. dollar index hit a 2-week high near 101.45. The CBOE Volatility Index, or VIX, is steady at 19.22, up more than 20% from last week's lows. WTI crude oil climbed 2.8% to $71.79 per barrel, a bit below its overnight peaks, and Bitcoin fell 1.3% to $61,083, possibly reflecting risk-off sentiment. The ADP report showed new jobs congregating mostly in the services sector at a more than 2-to-1 ratio to goods-producing positions. Pay gains for people staying in their jobs slipped to 4.7%, while people leaving for new ones got on average a 6.6% bump in pay, down from 7.3% in August. Stronger hiring didn't require stronger pay growth last month, said Nella Richardson, ADP's chief economist, in a press release. Jobs creation showed a widespread rebound after a 5-month slowdown, the firm added. Construction jobs dominated newly created jobs-producing positions. The ADP report tracks private employment and isn't often correlated with the official U.S. government payrolls data due Friday. So a stronger-than-expected ADP figure shouldn't have investors convinced that Friday's report will top current thinking. Yesterday's September ISM manufacturing PMI continued the report's contractionary ways with the headline reading of 47.2, below consensus of 47.4. The ISM services PMI has been far stronger than manufacturing, and that's due Thursday. Analysts expect to 51.6, a slight improvement from August. Also tomorrow morning, be on the lookout for the September Challenger Job Cuts report, which hit a 5-month high of 75,891 in August. Tech layoffs dominated the list. Overall, the number of job cuts was the most for August since 2009, and the Fed closely follows layoff trends. This Friday's September non-farm payrolls report could shed more light on paychecks, with analysts now expecting a 3.8% annual rise in average hourly earnings for September, equal to the August gain. but a 0.3% monthly rise, down from 0.4% in August, Trading Economics said. If those numbers are correct, wages are easily keeping up with inflation and could help workers feel more flush. Before the payroll report, investors await tomorrow's weekly initial jobless claims data. Claims and continuing claims have mostly been on the...
Okay, Mr.